if you have an international HQ and if you are residing in India, what is the way you can create your Indian subsidiary? First is the gift route, the second is the ESOP route. When you go to an investor to raise money, they could say that this is a very wrong structure and we cannot invest into this structure. Hi and welcome to On the Record, your playbook for tapping India. Hi, welcome back. We are looking at part 2 of how you can have your India presence when the founders are based out of India. If you haven't looked at our part 1 of this series, I highly recommend to check out that first so that to get the complete context of this topic. Now let's look at the third option that is available. I would say this as a corporate route. Now what happens, say you are two founder company, so both the founders incorporate an individual LLP for each of them. So there are two LLPs which is formed and it is not a private limited company, and I'll come back why LLP is recommended instead of a private limited. And these two LLPs go ahead and create a US company which is supposed to be the HQ or acting as an HQ in future. So they go and own, say 50-50 you own of the US company, and then that US company is not restricted to form a subsidiary in India, so that you can come back and form a subsidiary in India. So let's talk about why an LLP is preferred and why not a private limited. Multiple reasons. The LLP laws does not have a concept of a subsidiary. So technically the US company that you are owning, even if you own say 50-50 or a 50 plus structure, that is not considered to be a subsidiary company of the LLP because LLP laws does not define it that way. Whereas if it is a private limited company and if you own 50 plus percentage or if you have the influence to control the decision making of the board, then that company is considered to be a subsidiary company. Now you are trying to make an HQ and a subsidiary can technically not be an HQ. So that's why people go through the LLP route. Secondly, there is no consolidation requirements in LLP laws today. So if you have a subsidiary or if you have a holding company, then private limited, you may have to consolidate the books and report all the revenues, all the books, profits, transactions, consolidate it and file in the annual return in India. You don't have to pay taxes on it, but the tax for the US company would be still at US, but the reporting and consolidation will be done in India. So my question is, today LLP laws does not recommend or does not specify that that is a subsidiary and you are doing it. What about tomorrow if the government makes an amendment and change that this holding structure is actually a parent subsidiary relationship? That is one. Secondly, what happens again if the government makes an amendment and say that now the consolidation of the subsidiaries or associated companies has to be done at LLP level as well? So to me, this looks to be a blind bet because today the laws are not there. So tomorrow also it will not come. And mind it, it's not that the gift route was in use for 20-25 years. So the government will again take 25 years to make this change in LLP route. Now things are much more agile, much more faster. So this to me again looks to be somewhere you would be, your HQ will not be truly an HQ, is it? Because it is having a corporate holding structure. And secondly, yes, certainly if you are having two more companies to comply with, then your compliance cost and bandwidth also increases. So in India, you have to do all the compliances for a valid LLP running and stuff like that. So that is what my challenge is. It is still a very much safer route as per law. You are not doing anything wrong. You are not doing any blatant violation of anything. So you could still look at this option, but it increases your cost and you are still betting on the government is not going to make any changes in LLP laws in the future, whether it is in the short term, middle term or in the long term. Now let's look at one more structure that is prevalent. So a lot of time what happens, like a lot of founders start a company in India and then they are able to raise money right after the MVP or something else. So at that time a new structure is recommended, and because of all these complexities that you are based in India and you are not able to form a subsidiary in a straightforward way, because the world has still seen like the founders owning shares of the headquarter or the parent entity directly, not through a corporate structure. Now there is no way you can form a subsidiary in India. So a lot of companies, what they do is they form a parallel structure. So I call it as the parallel route. Now you go ahead and incorporate a company as usual in US with direct ownership of the share. If you already have an Indian company that continues to run, or you form another Indian company which is an independent and a parallel company which is again owned by the founders. So now you have two companies which is independently run and is linked by a services agreement. Now my question is this, you don't get any tax advantage, right? You would still be applicable under transfer pricing. If you had a direct subsidiary, the excess cash that you accumulate via transfer pricing is actually paid back to the parent entity at some point of time. But in this parallel structure, what will you do with that excess cash? You cannot be saying that the excess cash can be kept by the founders, because ultimately it is a corporate governance issue. You cannot be accumulating company's cash just because there is no way to pay it back to the US as dividend or something. Neither you should be doing, you would send all that money back as a revenue to the US company, because they are technically not rendering you any services. The second thing is, there is no cost advantage that you get. You are still ending up spending a lot of bandwidth doing all the compliances at both the sides, and you don't get any advantage of any of these things. Third is, what would be the name of both the companies? So let's take, for example, you have XYZ US. Are you incorporating XYZ India? If it is so, why would XYZ US lend its name to an Indian entity which is independently owned? Do you think Google US would allow you to form a Google India just because the founders are owning the same company? No. As the company grows, this thing starts mattering a lot. So you may have to change the brand at an Indian level, which again brings in the question, are the employees getting benefited of being a Google India employee or an XYZ India employee, or is there a different branding altogether to it? The final thing is, this particular structure again looks to be a stopgap arrangement, and it has not been time tested. So these startups, since the whole change of gifting route has been about 2 years old today, not even 2 years old, 1.5. A lot of these startups have not gone through advanced round of funding, due diligence and stuff. So you don't know how this would fare. And if you are owning the US entity directly, there is no way in future that you would be able to either float an Indian subsidiary, or you would be able to convert this company as a subsidiary of the US entity. So my question is, why do you really, or do you really need an entity in India just to hire talent? And that's why let's look at the fifth option. The fifth option is an employer of record. Now, an employer of record is an independent third party which actually helps you to hire talent on their payroll. Technically, in the corporate world, they are treated as your employee. It's just that for legal purposes, they are treated to be employee of a third party. What is legal purpose? Legal purpose is like availing bank loans for home, car or any other personal loans. Then the bankers would say, okay, you are employee of this EOR and not say Google, right? So that is the only difference that you get. But when you go for a job interview, then you will get the credit of the client that you are working for. So my question is, why do you really need an entity in India just to hire talent? EOR allows you to start onboarding people in just under 5 minutes. And you can also exit India in just under 5 minutes. Whereas if you have to incorporate your own subsidiary, it takes anywhere between 6 to 12 months just to onboard the first employee. And you would not be aware about this, but exiting India takes anywhere between 3 to 4.5 years. And that too, after closing all the business operations in India, it will take you about 3 to 4.5 years just to close the entity in India. So some of the other advantages in a EOR model is, you don't end up paying huge amounts in taxes and operations. Everything is handled by the EOR provider. So there is no transfer pricing that is applicable, and your cost of running the show in India really reduces a lot. You end up paying a flat fee per person per month. You don't pay a percentage of the salaries at which you are hiring. You don't spend anything on admin and other compliances. Everything is taken care by the EOR provider. And if you work with an EOR platform like Rapid, which is focused completely on India, you get to not just to create a remote team, you are able to create in-person or hybrid teams and anywhere in the country. So we help you to identify an office space anywhere in the country and take up all the compliances related to it. You can buy laptops, you can move laptops and any other assets that you want. It allows you to customize all the policies, practices, and benefits so that you can extend your own brand experience to the India team. So these are some advantages that you get when you work with very focused URs like Rapid and not with generic URs who focus on 150 to 180 geographies of the world. That's it. Now you know what are the ways that you can create your India team when you have a US or any international HQ. And if the founders are in India, just a quick recap. First is the gift route. The second is the ESOP route. The third is the corporate structure. The fourth one is the parallel structure. And the fifth one is Go EUR. So take a call, whichever suits your requirements. You should go ahead and use that. Thank you so much.